there. Adam Hewison here, co-founder of MarketClub, with your midday market update for Thursday, the 8th of December. Boy, this year's gone quickly, and now we're into December. Okay, Jon Corzine, IBM, the cloud. What else? Oh, yes. Do you want fries with that? Jon Corzine is testifying on Capitol Hill today about the collapse of commodities brokerage firm MF Global. The Corzine strategy is going to be, I simply do not know where the money is. In other words, it's not my fault. IBM announces today that it's buying DemandTec, a price management software company, for $440 million in cash to expand its cloud service offerings. We'll also be looking at both of those stocks today. Do you want fries with that? It seems to be working for McDonald's Corp. Global same-store sales jumped a bigger than expected 7.4% in November. We'll be analyzing McDonald's stock and show exactly what to look for in the future. Electric car maker Tesla tumbles 10% on a negative outlook for electric cars. We'll also be analyzing that stock today. Now let's go to the one truth you can count on, and that is the charts and how they can create, protect, and expand your wealth in the future. Before we go there, you may want to think about MarketClub's one-on-one coaching. Is it right for you? It's a free consultation, and the call is also free, so give us a call at 877-219-1482 and speak to one of our friendly representatives. I'm sure you'll enjoy chatting with them. So let's go to the charts and see exactly what's going on in the market. So we're going to go to, here's my home page. As you see, it's pretty much up to date. I just refreshed it. So a little pressure in all the equity markets today. The dollar is doing extremely well. As you know, we've been bullish on the dollar. We've said the other market is pretty much in a trading range, but we'll be analyzing those markets very closely, especially gold in the metal market. So let's go to our portfolio manager, and we'll also be looking at DemandTec, IBM, Tesla Motors, and McDonald's Corp today, analyzing those markets. So let's go to the first market, and that's going to be the S&P 500, and we're simply going to be looking at a very short-term chart, and you can see we've seen some pressure here. We sort of topped out a little bit. Today's action is not necessarily good action for this market. The 1243 area is support. However, we would not be surprised to see this market pull back to the 1200 level. And guess what? If we put in our Fibonacci numbers, drag it down, we get right to 1200.16. It's a 61.8% pullback. I think that's going to be possibly where we'll see this market pull back, certainly into the 1225, 12 area, unless it's a tremendous rally today, which I don't think we're going to see. For the week, we're probably going to close maybe flat to a little bit lower, but we'll see how this market works. But generally speaking, it looks as though the 1267 area is going to be enough resistance for this market to hold it, just as we were here. So let's see how it plays out. And let's take this off the screen, go to our next market. And the next market we're looking at is, of course, silver. Silver is just flatlined here. We talked about this on the show last night. If you missed the show, you can see it on demand on MarketClub TV. That's our one-hour show that we do, that Jeremy Lutz and I do every week, going over all the markets and taking your questions. So silver is minus 85, indicating that the trend is still down in silver. And the one thing we've alluded to here is if we go out further, and that is the market action is sort of sweeping, rounding out here, boom down, rounded out here, boom down. Are we going to see the same thing happen? It's very possible. A lot of people are getting very disillusioned with the metals market, considering what's going on with the banks and what's going on with Europe. So we'll have to see how that plays out. But generally speaking, today, if we see the market go through 3114, excuse me, that will indicate the PSAR. That's the parabolic stop and reverse, will kick in, indicating further downside pressure. Looking at the other markets, you can see we're sort of flat-lined on the MACD. We're not in an oversold condition yet, so I think we may still see some more weakness coming into the silver market. Now, gold is a little bit different. We've talked about this before. We do have our weekly triangle in a negative mode and our monthly in a positive mode. Now, this is kind of a conundrum because the trend, generally speaking, longer term from 1430.90, which we've talked about every day this week, is still positive, while the short term is negative. And certainly the level to look at today, I think, is going to be the 1703 level and certainly the 1696 level. If we go below those levels, it's going to augur for some further weakness. And can we take out this level? Well, it's possible we could test it, but certainly you're seeing resistance at the 1750 zone right here. As you see, several days we've just tried to peak above there and haven't been really that successful. Certainly today's action is not a good thing for gold at the moment, and of course it's all subject to change. Looking at the copper market, we've talked about this before, how copper is going to basically reflect the economy. With the stock market down today and under pressure, you're seeing the same thing happen in copper. We could see this market come back down, possibly testing the 335, 330 area, but we were at the top of the Donchian trade channel. Remember, we talked about that earlier in the week. We said that's probably going to be where the market stops, and in fact that's what has happened. And in a trading range, a minus 55, which we're in right now, it indicates you should be using an oscillator like the Williams %R here, and also the Donchian trade channels. Very, very important in a trading range market to look at those two indicators. So let's go to our next market, because we've got a lot of stocks to go through today. I want to cover I'd say McDonald's, IBM, DemandTech, you name it. But looking at this is the big kind of news today, with the crude oil moving below the $100 level, and it looks like it's going to close there. We didn't quite do it yesterday. We closed yesterday at 100.45. Certainly today, no follow through. The resistance level we talked about, the 102 area, sort of held true, and now we're testing this area. Now, are we going to go down and test the 96 area, or in this case the lows that we saw earlier in November, or I should say in mid-November? Yes, I think it's very possible. I think the market's going to be on the defensive. Certainly with our indicating plus 55, we are in a trading range, but the longer term still points up to see higher prices for crude oil. But again, we're overbought. We're coming back down, in the MACD, the MACD, just turned down, indicating maybe further weakness in this market. So I think this market's going to be on the defensive. Certainly a close down here is going to be the lowest close we're going to see in quite some time, in several days, probably a week or so. And for the week, let's just take a quick look at the weekly charts. It's going to be a negative week for the week if we close down here. So let's go back to our dailies, and let's go to our next market. And the next market we're looking at is going to be the dollar index, which is pushed up, really acting very well, plus 100 score. And I think the thing that we're looking at now is a test of the 79.50 area. This is a very important area, because we've tested it back here in October earlier. We had the pullback, came back up. If we go through this area, then we can see this market go quite a bit higher, in our opinion, probably back to the 85 level. And to go back, if we go like 5 years, we can get an idea where that is. So it's very possible we go back to 85, which is around there. We've been there before. There's no reason why we can't get there again. And certainly you can see this market's beginning to build that energy field, but it needs to close over 80, in my opinion, to really get some upside momentum to push this market higher. So let's go to and it's quite a ways from there, 78.87. So to close over there, you need really another 1.5 to get it really well, a good close. But next market is going to be the Reuters Jefferies CRB index. You can see right there we were looking for this market to come on the defensive. Certainly it has come on the defensive based on what's going on in crude oil and some of the other commodity markets. And generally speaking, the 305 area is a very important support area. Even though all of our trade triangles are negative right now, if we do close under 305, then I think we'll see a market test of the 295 level, which is going to be very, very interesting to see what happens. Cycle-wise, we could see this market on the defensive for about another week or so. So let's see how that plays out. Now let's go back to our portfolio and look at IBM. And IBM basically purchased DemandTec today to get more into the cloud business and to fluff out their lines there. But you can see that IBM actually, for the moment, is down about 0.75% for the day. But trade triangles have been long from 185 and 189 based on the weekly. But looking at IBM, you can trade these markets just using our monthly trade triangles. It's surprising how few trades you actually make. If you go back here, going all the way back to, hold on, let me just take that off. If going all the way back to the September 24th of 2010, you've only had really two signals. One was there at 132.49. It was an exit here at 161, so almost $30 profit in that, and then get back in at 185, and you've got maybe $7 profit. So you really captured the major part of the move, and that's the important thing. Now looking at DemandTec, and I think this is probably the most interesting stock we're going to be looking at, but maybe not. If we look at DemandTec, you can see our monthly basically got short or got told you how to get out. This is very simple. $6.99 you would have gotten in on this date, which is around July 2nd of 2010. You would have got out at this level here, 1081 on May 3rd, and that's 2011. And look, so $7 to 1081, so you made almost $4 profit on that. And that's a huge amount of money, but look what you avoided. And this is where the trade triangles really come into their own. Is boom, 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 boom. You went from this level, 1081, all the way down to about $5 a share. And now we had a buy signal at 8.08. So the trend was up, and you can see it did go up, came back down again. But the important thing is, look where it is now. It's up here at 1310 with the announcement that IBM is going to buy this company for $440 million. So again, they paid a huge premium to get this product, but you would have caught that premium based on this buy signal at 808. And that's why the trade triangles are so powerful and so easy to use. They keep you on the right side of the market. It's very, very seldom you'd ever see being short a market when it was taken over. Usually there's indications, there's rumors, innuendos, and this is what the trade triangles really detect and pick up really, really well. In fact, if you put our weekly ones in, you can see, boom, we had a weekly right here at 817. So here we are, we're $5 higher, huge premium, and just another good trade on the MarketClub trade triangle system. So let's go to the next market, and we talked about DemandTec, IBM. Let's take a Tesla Motors. And Tesla's very interesting. I'm a big fan of electric cars. And I'm going to go this real close in. You can see with today's action, there was a negative outlook by one of the major brokerage companies saying that these cars aren't going to be quite as robust as everybody first thought. It was obviously bad news for Tesla. You may have heard about the vault fires on the GM cars, something that people are obviously very concerned about. What I want to share with you today is this. If we look at this market, and let's just scope it out just a little bit so we get to where the lows are right here, and we just put this on a very simple close-only chart. We've talked about, and I'll take off the triangles so we don't have to need those, even though they worked out very well. You've got a double top here. We talked about double tops before. We've talked about pivot points. In fact, I'm going to put my telestrator on here and to show you this. Here we go. There's the first top, second double top, the pivot point. So if you measure from this pivot point, I'm going to approximate it around $31 to $35. So $4 from 31 takes this market back down to 27, which is right around here. Now, if we leave that on the screen, so just remember that that's the swing move for this pivot point, so we should be going down here to this level. And if I take everything off the screen, and I'm going to use my Fibonacci tool, and let me just leave that on the screen. We'll put our Fibonacci tool on there. So if we take our Fibonacci tool and we drag this down to the lows right here, that's where I want to be there, and that's close enough. So 2690 is a 61.8% Fibonacci retracement. Isn't that interesting? So you've got a pivot point measurement for a swing trade down to 27. You also have a Fibonacci support area down to 2690. So it'll be interesting to see how this plays out, but generally speaking, it would look as though Tesla, that's named after the brilliant electrical guy back in the turn of the century called Nikola Tesla, and a pretty interesting thing to read about, but generally speaking, it would look as though Tesla, for the moment, has topped out, and we'll see this market go a little bit lower. But also, looking at our trend triangles, we only have a long-term monthly that's up from 30, and everything else is down. The weekly is down, so you should be out of this market or short. That's how we're looking at it right now. So let's take everything off the screen, go to our next market, and that's going to be the stock let's get right here. McDonald's Corporation, and of course McDonald's has been doing very, very well. And I think what you can see a lot of trade triangles. Let me just put this on here like this. I want to turn this off. And our trade triangles, you can see, are plus 90, meaning a very strong trend. Now the question is, when do we first get into this market? You can see right here, 77.59 was our monthly trade triangles. The market's trading at $97.46, a really nice play. So these are things we're just not making up and looking back and say, well, let's put a triangle here. These are dynamic triangles that happen during the course of the day, and you'll find them very, very useful for catching big moves in some of the biggest markets in the world. So let's scope this out just a little bit further, and you'll see that there's the signal right there at 77.59. That was back on April 20th, and you can see how nicely that move is. Now the question is, how far is this going to go? I was playing around a little bit with this today. Let me just take everything off the screen to give you an idea where probably my guess is. Obviously, the psychological $100 level is going to be very important, but I drew some trend lines which I thought were very interesting, and I think one was going from here. Let's see if I can get this right. To here, and I think there was another one we put in. Let me get this somewhere like this. It looks like we've got some sort of a channel. We can move that up, but generally speaking, IBM is staying in this channel. It looks as though it wants to go. We could maybe give a center one there. Let's just see if we can get that going. Is we could possibly be, getting to an area where we're maybe going to run into some resistance around the, this $98 to $100 level. I think on McDonald's. A lot of good news has come out, but generally speaking, scope this down. We are in an overbought condition. We have the potential. We have made a new high, but the momentum on the MACD hasn't made a new high, so let's watch that very carefully. But nonetheless, McDonald's has performed very well. We're long from 77.59 based on our monthly trade triangles, and we're very happy about that. So, hey, we've covered a lot of stocks today. We've covered a lot of markets. We've covered IBM, DemandTec, McDonald's, Tesla, and of course all the 6 major markets we cover every day. This is Adam Hewison. I'm going to be here tomorrow at 1 the same time, same place, 1 p.m. I hope you can tune in. We're obviously coming to the end of the week. It'll be very interesting to see how these markets close, and hopefully you're having a good day today. So this is Adam Hewison from MarketClub. I'll see you right here on MarketClub TV.